Good morning, I'm Charlotte, and this is Money Borders. June kicks off with red across the board on Wall Street. And yes, our wallets are already feeling it. Fresh tensions between the US and China are once again shaking up the markets. The Dow, S&P 500, and Nasdaq all opened lower, despite an impressive rebound in May. So, what's going on? And more importantly, should we start hiding our credit cards? For a closer look at today's downturn and what's behind the red numbers, we turn to our financial analyst Michael Stein with the full breakdown.
Thank you, Charlotte. This morning, Dow Jones futures are down 0.47%, sitting at 42,071 points. The S&P 500 drops 0.56%, while the Nasdaq 100 slips 0.66%. This comes after a strong May. Dow Jones gained 3.94%, S&P 500 added 6.15%, Nasdaq soared 9.56%, its best month since November 2023. But Morgan Stanley's Chris Toomey is skeptical. He warns that markets may be pricing in the best-case scenario while major risks still loom. And the biggest one? Tariffs. Trump's chaotic trade policy remains at the center of uncertainty, with courts sending mixed signals, some rulings striking down tariffs, others temporarily restoring them. Adding fuel to the fire, the US-China trade truce is crumbling. On Friday, President Trump accused China of violating the 90-day suspension agreement. Overnight, Beijing hit back, accusing Washington of breaching the Geneva deal and announcing retaliatory measures. These include restrictions on US software, pushback on anti-Huawei policies, and criticism over revoked student visas. As a result, institutional investors are pulling away from US Treasury debt. Analyst Jose Luis Cava explains that US bonds, once seen as risk-free, are no longer considered so safe. The spike in CDS, credit default swaps, premiums suggest that markets are now pricing in higher default risk.
And over in Europe, investors aren't feeling any more confident. BCA research warns of a tough summer for long-term investors. The Euro Stoxx 50 is expected to stay range-bound between 4,650 and 5,500, punishing for buy-and-hold strategies. While European stocks are cheaper than those on Wall Street, they're expensive relative to their own history. Corporate profit margins are also peaking, but face downside risk from US tariffs, a strong EUR-CNY, and weakening pricing power.
Cryptocurrencies Bitcoin is holding above $104,000, though showing slight weakness at the start of the week. Ethereum is climbing modestly, trading around $2,500. BNB remains stable at $654, while XRP is edging down near 2.15. Cardano is also holding steady, just under $0.70. Gold versus the dollar gold is currently trading at around $2,250 per ounce. The metal remains a preferred safe haven, though its momentum has cooled as traders await clearer signals from the Federal Reserve. Oil prices. Crude oil is down sharply. West Texas Intermediate is now trading below $73 per barrel. The drop is driven by weaker demand expectations and rising global inventories, particularly as China slows its refinery activity. Meanwhile, traders are expressing doubt over any additional production cuts from OPEC+. Major indexes in Europe, DAX, Germany, opened at 23,997, slightly up 0.27%. IBEX 35, Spain, is sitting at 10,095, nearly flat for the session. In the US, Dow Jones futures are down 0.47%, landing at 42,071. S&P 500 contracts are down 0.56% at 6,878. Nasdaq 100 is down 0.66%, trading at 21,200. That's all for now, Charlotte. Back to the studio.
Thank you, Michael. Clearly, June begins under pressure, with markets reacting not only to numbers, but to courtroom decisions, policy shifts, and the next moves from Trump and Xi. At Money Borders, we'll keep you informed every step of the way. I'm Charlotte. Don't forget to subscribe, turn on notifications, and stay with us as we navigate the ever-changing global economy. See you soon.